Yeah, listen, you can make money in almost any market in the United States. I don't care if the population is growing, if the population is flatlined. Like if you understand that market,
Hmm.
you can make money. And
No, absolutely.
you just, but you got to put in the work to understand it.
Alrighty, folks, if you take a listen to our first episode, we talked about investing in the big markets, but I forgot, and Jonathan remembered, we wanted to highlight where the opportunities might be. Jonathan, what are you thinking?
Well, I was waiting to hear what
Oh,
Ken McElroy said and then
yep.
react to it because
Yeah,
I
so
wanted to hear what he said.
Ken McElroy and John Burns Real Estate Consulting are basically saying the same thing. So I'll give you some stats from John Burns, and then we'll pivot to Ken McElroy. Basically, John Burns, top 6 markets for inventory delivery. Dallas, Texas, 55,000. I'm just going to round these numbers.
Hmm.
New York, 53,000. Phoenix, 51. Austin, 42. These are in thousands. Newark, 39. And Atlanta, 34,000. So what John Burns and Ken McElroy are saying is basically the Sun Belt and New York, right? New York and Newark, uh, kind of the tier 1 markets. So the opportunity where the overbuilding or saturation will not happen is in the tertiary or tier 2 markets. So it's going to be interesting to watch if something like that happens.
So, did they identify any tier 2 markets to look at
No,
or
they did not
no?
list them. They just basically said, "Hey, go look over there."
So I would say, so they're just reporting the raw numbers. Those are not in
Correct.
percentages.
No.
So the thing is, 55,000 apartments delivered in New York City and 55,000 apartments delivered in Dallas are two very different things. Given
Correct.
that Dallas is like, I don't know, a quarter of the size of New York or a
Yeah,
third of the size of New
30%.
York.
Yeah, probably
Yeah.
30%.
So it's 3 times as high on a percentage basis as New York, where, the vacancy rate in New York is 1.5% right
Ooh,
now.
wow.
So, this is
The New
not
York vacancy is 1.5%.
1.5%.
Wow.
I'll tell you a crazy statistic that so the rent control laws that we talked about in uh, the last segment were imposed after World War II when there was a housing crisis because of all the soldiers being
Yeah,
demobilized, right? And
makes
so
sense. Yep.
the law was written so that rents would be stabilized and or controlled until such time as vacancy reached 5% in New York City. And when vacancy reached 5%, then those laws would cease to exist. The problem is vacancy has never reached 5%.
So I just want to make sure I heard that right. There is law on the books that would eliminate rent stabilization in New York if vacancy equaled 5%. Is that
Unless they have eliminated that provision, which I don't know about, but that was the way that the law
well, why
was originally
bother
written.
if it's only 1.5? Why bother?
So
Oh,
so
that's
if
crazy.
vacancy ever got to 5%, then they would say, okay, there's enough supply in the market. The market's functioning. We don't need rent control anymore.
Wow,
But the problem
that's
is
crazy.
the vacancy rate in New York City has never reached 5% since World War II.
World War II.
It
Wow.
has, I think, topped out at 3%,
Huh.
which is precisely why, other than this crazy 2019 revision of rent control, that people thought New York City was a sure bet. Because look,
Oh yeah,
vacancy
of
has
course.
never exceeded, it has not exceeded 3% since 1945, right? So,
Makes
that's
perfect sense why it's the creme de la creme.
yeah,
Yeah,
so
makes
that's why
sense.
people are getting, talking about like, oh, well, look at the population growth in the Sun Belt, it's going to keep your apartments full. Well, I mean, it's not really about the growth, it's about the supply and demand.
Correct.
And so the supply and demand, the way that it used to work in New York really favored you if you were an owner, which is why people put up with all of the other stuff that they had to put up with. But now that the calculus has changed. But anyways, that aside, um, you know, it it's funny how things kind of come in full cycle, right?
Yeah.
When I started investing uh back in 2011, and when I started my own company in 2013, I was looking at those secondary and tertiary markets because
Hmm.
I was looking at them and saying, look, these places have a lot of these places have very good population growth. They have a really favorable kind of supply and demand equation going on.
Hmm.
And they're under the radar because
Yeah, very ignored.
they're not, you know, uh they're not New York City. They're not, increasingly even at that time, Dallas, right, where everybody was flooding to Texas. And I was like, okay, if you guys are all great, please go. I'll have these other markets all to myself. Right.
Right.
But people were telling me I was crazy. Like, why would you invest in Greenville, South Carolina? Or frankly, they wouldn't say like, why would you invest in Charlotte, North Carolina? Right.
Wow.
And places
Oh,
like that. Right. And
wow.
it's like, well, because look
Yeah.
what's going on
Math.
there. Yeah.
Math.
Yeah. And so, I'd say the major change now is that, you know, places like Dallas and Phoenix were not considered top tier markets, or Miami were not really considered top tier
Mhm.
markets before. Now they are.
Oh, no
Um,
question they are now. Yeah.
but but now, so they're the top tier markets, and people who are saying, well, ignore the top tier markets and go to the next level down,
Yeah.
or the one after that. It's like, well, that's what I've always been doing. And like,
Yeah, exactly.
you know,
Yeah, I think it's really, I mean, again, you're on the channel because you're conservative, and probably there's a state that you're doing a deal in, wasn't it Montana?
South
It
Dakota.
was, oh, South Dakota. Ah,
Yeah.
one of those ones way up in the middle. But I mean, that's just an example of looking at population, looking at trends, looking at kind of percentages, and um, that's what it takes. One of the reasons I still speak at events is I want to know where everybody else is looking.
Yeah.
And I will never, ever, ever go where everybody is. It
Yeah.
makes me physically uncomfortable.
Yeah, me too. I get that same visceral reaction
Oh,
of like, I'm worried about something
yeah.
happening if everybody is all rushing, because they're all rushing to the same place without really thinking about it that much. It's
And
all
they
just,
don't know why. They don't know
yeah.
why they're going there. They don't have their own thesis. Their thesis is, well, everybody else is there. I'm like, why
Well,
is that a
it's
good thing?
yeah, it's like those people who go on Facebook and they put up a post saying, "Is X town a good market to invest in?" Like, really, that's how you're going to
The
determine,
criteria.
because somebody else said yeah or no, right? Like,
That's
come
funny.
on, that's so lazy. You can't. This is like your money, right? Or maybe somebody else's money that you're talking about. Like, that's you gotta
Be
dig
better,
deeper
folks.
than
Be
like
better.
what everyone else is doing, or what like one guy told you. Usually when people are putting a post up there, like, is X town a good place to invest? It's because they've already decided to invest
Mhm.
there, and they just want somebody else to tell them it's a good idea.
Or
Right.
they've already got capital deployed and they want to bring other people there.
Right. Yeah. Or they want to have their decision
Yeah.
validated after the fact, after it's already
Yeah.
too late to do anything about it, because they realize they didn't do any, enough
Any
work.
due diligence.
Yeah.
Yeah. At the end of the day, folks, I think there's always opportunity here, but think for yourself, do your own work, have a thesis, have an opinion. Um,
Yeah.
I
And
think there's
listen,
always opportunity. Yeah.
yeah, listen, you can make money in almost any market in the United States. I don't care if the population is growing, if the population is flatlined. Like, if you understand that market,
Hmm.
you can make money.
No,
And
absolutely.
but you got to put in the work to understand it, right? That's yeah, do the work, okay? Just like Michael's hat says, like, that's the point. So don't be lazy, and don't follow the crowd. Like,
Yeah.
you you know following the crowd just means that the crowd has to keep on going in the same direction forever for you to be
Nobody,
assured of making
but
money.
and when you're in the crowd, nobody has a countering opinion. Nobody's
Yeah.
having critical think. Nobody is, steel manning the other side. It's
Oh,
just
listen,
like,
no,
oh,
no, I mean, when my Facebook group was at its peak of activity,
mhm,
and I would tell people like, hey, this
yeah.
is like 2018, 2019, like, you know, hey, maybe you guys should reconsider, think about kind of what's going
Oh
on.
no.
I
Yeah.
got, I
You were
got
attacked.
I got abused for that. I was called stupid. When I sold my portfolio, I was accused of trying to time the market. And I'm like, no, I'm taking chips off the table and making a profit. You are trying to stay in the market to the last possible moment. You're the ones who are timing the market. I
Yeah.
just know it's a good time to sell,
Yeah, I've
right?
returned capital to my investors. Everybody's happy. Yeah.
Yeah,
Ay,
like
ay, ay.
you can't time the peak. It's true, but you know when it's a good time to sell and when it's not a good time to sell, right?
Yeah, yeah. One of my guys on Sunday, Dan Bird, talks about nobody can ever top the top and the bottom, but if you get 80% of the run or prevent 80% of the pain, that's good enough, and
Yeah.
that's what he's all about. Yeah.
Yeah. It's like it is far better to sell too early than it is to hold on too long.
Absolutely.
Yeah.
Yeah, absolutely. Absolutely. Yeah, folks, again, there's always opportunity out there. Follow Jonathan on LinkedIn. That's where he is active. You have conversations, reach out to him. Jonathan, you're amazing. I look forward to talking next week.
Thanks, Michael. See you soon.
You got it.